Why don't you want to buy Bitcoin a year ago? Well, Bitcoin's supposed to be an inflation hedge. There's no inflation according to the Fed. Okay, so dump Bitcoin. Why don't you want to buy Bitcoin now? Well, the Fed admits there's inflation and they're going to do something about it. So they're raising interest rates. So what should you do? Dump Bitcoin now. Okay, well, if it made sense to not own Bitcoin when inflation was here, but the Fed didn't recognize it, doesn't it make more sense to own Bitcoin when inflation is obviously here and the Fed does recognize it?
Hey guys, welcome back to the channel. Today we have Michael Saylor giving us all the Bitcoin news for 2022. Saylor remains long-term bullish on Bitcoin despite a gloomy macro backdrop. Bitcoin has lost nearly 60% of its value from its all-time high of $69,000. BTC is hovering just below $30,000 as of today. The Microstrategy CEO also highlights the fact that despite Bitcoin's poor performance over the last few months, BTC is up more than 3 times since the start of 2020. Let's get right into the interview with Michael Saylor. Please watch till the end of the video and comment down below what you think. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Why don't you want to buy Bitcoin a year ago? Well, Bitcoin's supposed to be an inflation hedge. There's no inflation according to the Fed. Okay, so dump Bitcoin. Why don't you want to buy Bitcoin now? Well, the Fed admits there's inflation and they're going to do something about it. So they're raising interest rates. So what should you do? Dump Bitcoin now. Okay, well, if it made sense to not own Bitcoin when inflation was here, but the Fed didn't recognize it, doesn't it make more sense to own Bitcoin when inflation is obviously here and the Fed does recognize it? Well, no, because the Fed's going to address it. Well, they're not really going to address it because the inflation rate is 20% and they're not going to raise interest rates to 20%. And now you come back to the issue of, well, what do you think about that? Well, 95% of the returns in Bitcoin over the last 9 years came in 2% of the trading days.
That's it. That's absolutely true. I mean, you have these massive bull runs and you're either in the move or you're not, right?
Someone did the analysis. I think Howard Marks did the analysis on the S&P, and they determined that there was like 1 trading day a year that accounted for 100% of the S&P yield for 20 years. Like there are 20 days that amounted to all of the return in the S&P over 20 years. And there's like 5 days a year that amount to 95. If you miss the top 5 days of the year in Bitcoin, your return is 7% a year. And if you had those 5 days, your return is 147% a year. At that point, everybody stampeded into the stock market, and that was the K-shaped recovery. Look, Amazon bounced from $1,700 a share to $3,400 a share in a matter of weeks, like by the summer of 2020. Yeah. And it's been sitting and chopping sideways.
Saylor says that in these markets right now, there's no simple place to hide. All indexes are bear market territory. Bonds don't represent a safe refuge because they're currency derivatives. Stocks have to grow their cash flows faster than the inflation rate.
Disney traded as a property. People said, I don't really care what the revenues are or what the cash flows are. I mean, Disney owns all these great iconic brands like Marvel and Star Wars, and it's a property. I just want to own the intellectual property. So if it's a property, be it a building or a stock or a piece of art or a crypto asset like Bitcoin, the next question is how scarce, how desirable is it? If it is the Disney and it is the dominant intellectual property, entertainment property in the Western world for the next 100 years. So, and is Bitcoin as good as some other crypto? My view is Bitcoin is the apex crypto asset. London and New York and, are the apex real estate assets. Go figure. Disney must be the apex intellectual property asset. Somebody owns a drug. Maybe they're the apex medical asset. Whatever you're doing, find scarce assets and that are going to be able to raise their price, or you can sell them in a decade for 10x what you bought them for, if there's 10x as much money, and they're not reliant upon lots of labor and lots of energy and lots of lots of motion, right? Because the one thing the world doesn't do that well is it doesn't move things around with high velocity at low energy cost in the year 2022, right?
Yeah.
That's the beauty of like Disney or Netflix is I'm going to stream that, right? If, you know, the value is I just own it. If I can stream it, if I can own it, if I can move it on a network, I feel like it's not energy intensive. It's not labor intensive. It's not currency intensive. If it is valuable, you want it to be valuable to people in London and New York, not valuable to someone in South America or Africa or Asia. I mean, I love everybody equally, but as a financier, you know, people are just pay 200 million for an apartment in New York City. They're not going to pay 200 million for an apartment in Venezuela, right? So it's figure out where your trophy property is, own it. And then if you can buy it with debt that's long-term, 10, 20, you know, long duration debt, you're not going to get wiped out of. Your arbitrage is you buy something going up in value 15% a year and you pay 3% a year for the debt and you scrape the 12% arbitrage on the asset. And if you get $1 billion position or $1 million position, $1 million position is paying you $120,000 a year while you wait this out. And so that's the rational move. If you have massive inflation, people lose faith in the money, in the currency. If you look at the headline inflation number everywhere in the world, it's the lowest price appreciation that a government might, with a straight face, represent to its population. And so that's, you know, that's somewhat disturbing when you look at the nominal inflation. I'll call it nominal, but it's really the nominal CPI inflation rate in Argentina, if they say it's 40 or 50%, or in Turkey or someplace. When the government says it's 40%, that means the actual inflation rate is higher. In my Twitter, people will say, well, the real inflation rate here is 120% or 80%. The government says 40%. The government says it's 7% in the Western world, but we know that the cost of housing is up 25% or 20%. And we know the cost of gasoline is up, whatever, 50%, some extreme amount. The lowest inflation number we're going to see is the CPI number, because it's almost cherry picked to be the things that are least likely to go up in price. I would start with the first question, what is inflation, right? And if inflation is the appreciation in the price of something, but the CPI, the 7% number, is just a single measure of a market basket of consumer goods. It doesn't even include, you know, a house purchase, for example. So we know the inflation rate on energy is much higher. We know that, like, Canada just announced like yesterday that the housing prices are up like 25% or something. I feel like before World War I, gold was a store of value theoretically. But, you know, at some point at different stages between now and between then and 2008, sovereign debt was a store of value. If, you know, Greek bonds yielded 8%, you know, well, like what Turkish debt is yielding like 14%.
Yeah.
And it was the central bankers' attempt to actually give people a fair yield against an inflation rate, which is running more than 14%, but at least there's lip service to it. After 2008, we took, you know, those rates down so low that you could say the monetary inflation rate's been running up to 10%. The bond rate's been 3%. There's been a negative 7% monetary yield. There's been and right now there's a negative 7% real yield. It's 3x worse than it was for a decade.
Michael Saylor believes that if you zoom out 2 years since the beginning of 2020, the U.S. money supply has expanded. Gold is up, the S&P index is up, NASDAQ and Bitcoin are up. So if you can stomach the volatility, you can take the long view, you've got a safe haven there. Saylor says he will continue to buy more BTC regardless of the price, and that whenever they have some spare cash, they'll buy more Bitcoin. They're taking a very, very long view toward this. The network is only getting better, adoption is improving, and very constructive regulation is coming out of DC. The Lightning Network is moving closer to Satoshi's promise of letting everybody in the world trade with each other at the speed of light in a fair and equitable fashion. Saylor says he'll be buying at the top forever, The maximalists believe that Bitcoin is an instrument of economic empowerment and he's not trying to time the market. But what do you think about Michael Saylor's view for Bitcoin for 2022? Comment down below. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.